Excellent. All right. Well, thank you everybody for joining us today. I'm in hibernation, quarantine here in Sydney, and so I'll do my best to communicate in this strange world that we're in now, where you can sort of see me and I can see you. I hope that's all working well. So here's 7 ways to improve your business cash flow. I'm going to work on the basis that you can see and hear me. And if that's not the case, I hope somebody will phone me up. So obviously, cash flow is the heart of any business. And right now, more important than ever, with the changing economy, that you know exactly where you are. So I just wanted to share this. You know, the best laid plans of mice and men often go awry. No matter how carefully a project is planned, something may still go wrong with it. The saying's adapted from a line to a mouse by Robert Burns. The best laid schemes of mice and men. And I think that's where we find ourselves today. Now, at Kelly+Partners, we believe in a structured way of moving forward in life and business. And the reason we believe that is we know that a lot of what people consider as black swan events are actually just swans that went for a swim in a lake. And in most lakes, there's mud, and so they come up brown. They're not actually black swans. They're actually beautifully white swans with a little bit of mud on them. So right now, we've got a brown swan event. We've got a pandemic that happened before. It's not the first time. We might not be able to remember the last time, but we do know that it's happened. So at Kelly+Partners, we built systems and processes to help make things predictable in an unpredictable time. So let's get through these 7 things. Very, very simply, most people don't have a pro forma profit and loss. And what that means is a very clear understanding of what their profit and loss should look like if everything was going well. So grab your profit and loss, put it in your Excel, put dollars, percentages, and days, and come up with what you think they are meant to be. If $1 goes in your revenue, what goes out in your cost of sales, what goes out in each of your overhead lines, and what's your operating profit. If you don't have an ideal in mind that you're focusing on, you definitely can't achieve it. And so it's very important to start with an ideal profit and loss statement. Now, I know at the moment it won't be ideal, but in each industry, there is an ideal situation with your profit and loss, and it's very clear. It's very important in my mind that that's clear in your mind. Once you've got that, build a great forecast. Now, I sort of with trepidation think that I could switch over and see if I can pick up that document that I've got on my desktop, but I'm not that confident. So just bear with me, and I'll just explain that a great forecast can show you exactly what your cash position is at any day. Now, I feel like I could take the risk and see if I can find it for you. Let me see. Yep, here it is. So this is the example, a P&L cash flow forecast. If you don't have something that looks as amazing as this, then be in touch. You know, essentially, if you know exactly what your forecast should look like just here, then you can work out your benchmark percentages. It'll show you profit on $1 million, or say $1. You can see exactly what should happen to that. So say $100, you can see that moving. And then let's say your business does $1 million in revenues. I can go over here and say to you today, let's say that we get a minus 20% impact on your revenue. What's actually going to happen? So hopefully everyone saw that down here, you're at $70,000 profit. But if you get a minus 20% impact on your business, you're going to have a situation where the profitability is affected. Now, importantly, down here, you know, we would work out what your opening cash position is and what debt repayments you have, and then what might happen with your debtor days. I would expect at the moment your debtor days might double. And what you can see here is that if you get a 20% reduction in your revenues and a 30-day increase in your debtor days, then your net cash is going to be negative. You're going to run out of money. If that gets worse and it's 60 days, you can see here you'll run out of money quite quickly. If you get a 30% decrease in your cash flow, it's going to get worse. Now, I'm just relying on the tech and hoping that you can see that, but what I'm trying to demonstrate is that most people have never seen a great forecast, and almost 99% of the more than 20,000 businesses I've been in over the last 27 years don't have a forecast at all, let alone a great one. If you don't have one, you're going to run out of cash, you're going to die, and that's not great. This is not good for Australia if businesses are not forecasting well. Number 3, go and look then at your largest items first. So we would go in and we would look at your expense items. We'd look from biggest to smallest. We would make columns of what is essential and what is optional. We'd try to remove everything that's optional that just doesn't turn the dial right now. And we would then look to negotiate on commodities that you have that are major, things like your phone bills and those sorts of things. Make sure that you understand exactly what your biggest to smallest expenses are and how much it costs to run your business each day, each week, and each month. And then I want to talk to you about terms. This is your business, so I want you to evaluate your terms of business. Right now, a lot of people are struggling. Make sure that you know more about how you're going to get paid than what you're going to get paid. Most people focus on price. They don't focus on terms. They should focus on terms as much, and at the moment, even more than they focus on price. You see, if somebody gives you a deal, you think, oh, the price is great that the client's willing to pay, but they don't pay you. And fundamentally, you've given the work or the product away for nothing. And so make sure you secure your cash, get 25% or 50% up front. There's only one bad thing that can happen, and that is you go out of business. And the number one way you're going to go out of business is if somebody that you've done business with doesn't actually pay you. So evaluate your terms and add a cash up front component. Now, most people don't have a huge amount of discipline when it comes to getting paid. And what I mean by that, I'm publishing an article and I'm giving to Dale this afternoon to share with you. What I mean by that is they actually haven't developed a way of working out how they're going to get paid. So you've worked out you're going to get paid up front. That's great. But now how are you going to enforce that? Start with an upfront payment, 25% or 50%, and then work out how many days you're going to allow somebody to take to pay you. Say it's 7 days. You need to know that you will phone that creditor on the 8th day and ask them, hey, did you pay me yesterday? I haven't seen the money. Have I missed it? Can I get paid, please? And you must make sure that you then understand what happens next if they don't pay you. Make sure on the 8th day you get payment or you get part payment. Go and see them face to face. Don't hold back, because if you don't get paid, you're going to get put out of business. What I see very often is people just wait. They go, oh, yeah, they'll pay. They're good guys. Mate, a lot of people are good people, but that doesn't mean that they don't have financial stress. And their financial stress, that'll be transmitted to you if you don't have real discipline about when you get paid, how you get paid, and when you get paid on completion. What I like to do is I like to not deliver the final product until I get paid. So I'll deliver the tax return. I'll say, there it is. It's all finished. Great. When you pay us, we will lodge that tax return. I've done this since the very first day I started because I knew that I just couldn't afford for somebody not to pay me. So the discipline of your payment process is going to be related to your own self-discipline and that of your team. You must make very clear that this has to happen with massive discipline. And on that note, if you don't ultimately do this, so you must make sure that you've got legal practitioners who can support you to collect your money as soon as this thing gets a little bit out of shape. But if you get 25 or 50% up front, and then you progress bill halfway through your job, you should only have about 25% left when the final product is being delivered. And so that's very much reduced your risk of going out of business. The sixth thing I want you to do, I want to spend a little bit of time on this, is I want you to segment your customers and suppliers. So understand who your best customers are. They are not just people that pay the right price, but they are people that pay on time and in some cases pay fast. Spend 90% of your time on your 10% best customers. They talk about the 80-20 principle. I believe in the 90-10 principle. Segment your customers. Look for your top 10% of customers. They're probably 90% of your profit. Overwhelmingly focus on these people. Get rid of the bottom 20% of your customer. Any person that's paid you slow in the past, get rid of them, because in this climate, they probably won't pay you at all. And finally, look at your suppliers and make sure that you understand who your critical best suppliers are, and you make sure you pay them on time. You see, you're likely to get what you give. If you're a fast pay, you'll probably get paid fast. If you're a slow pay, you'll probably get paid slow. And so you need to look after your best suppliers. Go with your other suppliers and negotiate terms. so that you can either not do things that you don't need to do anymore, or you can pay those people maybe slightly slower than you paid in the past. And then number 7, I think overwhelmingly, this is absolutely critical. This is some of our team at Kelly+Partners. This has got to be an all-person responsibility. Every single person in your company needs to understand how critical it is that you guys are collecting your cash and that you're collecting it on time. Because if you don't actually make that happen, then what's going to happen is you're going to have a situation quite quickly where somebody's going to just not collect your money, and they're going to say to you, oh, securing the cash in your business is everyone's job. If people are not aligned to collecting the money for the business, then make sure that you don't have them in your business, because you won't ultimately be able to pay them. And they won't be very pleased when that happens. And so explain to your people, hey, you get paid every 30 days. I need to make sure we get paid faster than I have to pay you. So if I have to pay you every 30 days, I want to collect my money faster than 30 days. You must personalize the message. You must make sure that your people personally feel how important it is to get paid. I make it very clear. I've always said, listen, if our customers don't pay the business, then I will not be able to pay you. So if you want to get paid, you need to help me with that exercise. So look, my name's Brett Kelly. I'm the founder and CEO of Kelly+Partners Chartered Accountants. We've got 15 offices in New South Wales and Victoria. We're available digitally. I'm very digital, not really, but we're working at it. Certainly my team are more than me. And I'd love to hear from anyone that actually wants help today. And so it's been a great pleasure to be able to share this with you today, and I hope it's made a difference. And as I like to say, have a great day.